Today, we're breaking down one of the most powerful on-chain metrics out there, the Spent Output Profit Ratio, or SOPR. This single indicator reveals exactly when investors are cashing out, whether they're taking profits, panic selling at a loss, or just breaking even. Smart traders use the SOPR to pinpoint trend reversals, confirm market tops and bottoms, and gauge whether Bitcoin is in accumulation or distribution mode. It's an incredible tool for understanding market sentiment and structure, and when combined with other key indicators I'll share in this video, it becomes even more powerful. Let's dive right in. So, what exactly is SOPR, and why does it matter? At its core, SOPR tracks whether investors are selling at a profit or a loss. It does this by comparing the price at which coins were last spent to the price at which they were originally acquired. If SOPR is above 1, it means investors, on average, are selling at a profit. If it's below 1, they're selling at a loss. And if it's hovering around 1, the market is essentially at break-even. Coins are moving at roughly the same price they were bought for. This makes SOPR a highly responsive and fast-moving metric, which is why it's especially useful for active traders. To make it even clearer, we'll be using a Z-score for SOPR. This standardizes the data, helping us spot when SOPR is unusually high or low compared to its historical range. The Z-score measures how far a value is from the mean, making it easier to pinpoint major shifts in market sentiment. And an important note, the profit and loss barrier on the Z-score is at 0. Now, to fully appreciate SOPR's significance, we need to compare it to another key on-chain metric, the MVRV, or market value to realized value. These two metrics work in tandem, but they measure different things. The MVRV tracks unrealized profits and losses, meaning it focuses on coins that haven't moved yet. SOPR, on the other hand, looks at the spent domain. It only considers coins that have actually been transacted. This distinction is crucial. The market value to realized value gives us a leading indicator of where selling pressure might emerge, while SOPR confirms what's actually happening in the market. For example, if MVRV is high, it means investors are sitting on large unrealized profits. But unless SOPR also spikes, those profits aren't actually being realized. That's why SOPR is such a powerful confirmatory tool. It shows whether investors are actively cashing out or if they're holding on. Understanding realized versus unrealized profit and loss is key when analyzing SOPR. A realized profit happens when an investor sells a coin at a higher price than they bought it. A realized loss is when they sell for less. During bull markets, SOPR tends to stay above 0 on the Z-score because investors take profits, but there's enough buying demand to absorb the selling. In bear markets, it often remains below 0 as investors capitulate and sell at a loss. A perfect example of this was the 2022 bear market. Many investors who had bought during the previous bull cycle panic sold at rock-bottom prices, leading to a surge in realized losses. This kind of capitulation drove prices sharply lower. But on the flip side, when profits are taken in a more controlled manner, new buyers step in at higher prices, setting a new cost basis. This constant transfer of assets from lower to higher cost bases is a major force driving market structure and future price action. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. SOPR can also be broken down into different cohorts to give even deeper insights. Total SOPR includes all Bitcoin transactions, but there are two subcategories that traders pay close attention to: long-term holder SOPR and short-term holder SOPR. Long-term holder SOPR tracks investors who have held their coins for more than 155 days. It's particularly valuable when looking at market cycle extremes because long-term holders tend to accumulate during bear markets and sell during bull markets. That's why LTH SOPR tends to show big swings, reflecting significant profit-taking or loss realization when these investors finally move their coins. Short-term holder SOPR, on the other hand, is much more volatile and erratic because it tracks coins held for fewer than 155 days. These short-term holders are more sensitive to price movements, making short-term holder SOPR a great tool for spotting local tops and bottoms. When short-term SOPR spikes, it usually signals that recent buyers are taking profits. When it drops, it shows they're panic selling. Because of this, short-term SOPR is especially useful for gauging real-time sentiment and identifying shifts in market structure. SOPR is also an excellent tool for spotting key support and resistance levels. In bull markets, SOPR-Z often retests 0 as support, meaning investors are willing to buy the dip. But in bear markets, 0 often acts as resistance, meaning investors use price rallies as exit opportunities. A great example of this was during Bitcoin's 2017 bull run. SOPR-Z consistently bounced off 0, showing strong buying interest at key support levels. But in the 2022 bear market, it struggled to break above 0, reinforcing the heavy sell pressure. Another reason SOPR is so valuable is that it helps identify extreme market conditions. When SOPR values are high, it often signals that investors are aggressively taking profits, potentially marking market tops. When SOPR values are low, especially during capitulation events, it suggests that sellers are running out of steam, which can mark a market bottom. If SOPR-Z fails to hold above 0, it's often a sign that the market lacks bullish momentum. Beyond these basic insights, traders can also use SOPR-Z in more advanced ways to fine-tune their entries and exits. Retests of 0 can help confirm broader market trends, while extreme SOPR-Z values, whether far above or below 0, can signal potential market tops and bottoms. Probability bands, which are based on standard deviations, can also be used to assess risk. If SOPR-Z rises above 2 standard deviations, it often means the market is overheating, signaling a potential top. If it drops below minus 1.2 standard deviations, it suggests a capitulation event, which could indicate a market bottom. By combining these insights, traders can refine their strategies and improve their risk management. Out of all SOPR variants, short-term holder SOPR is arguably the most important. Short-term holders are the most reactive to price movements, and their selling behavior heavily influences short-term trends. If short-term SOPR-Z flips above 0, it often marks the beginning of a trend reversal. A great case study of this was the market recovery in early 2023. Throughout 2022, short-term SOPR-Z kept getting rejected at 0, reinforcing the bear trend. But in early 2023, it finally broke above 0, signaling the shift to a more bullish market structure. This is why traders closely watch these flips. Short-term SOPR can provide some of the earliest signals that a new trend is emerging. So, to wrap things up, SOPR is an incredibly powerful tool for understanding market sentiment. It tells us when investors are taking profits, panic selling, or simply breaking even, giving us a clear picture of the psychology driving Bitcoin's price action. When you know how to read SOPR, you can spot major trend shifts before they fully play out. It also acts as a crucial support and resistance indicator. When SOPR-Z stays above 0, the market is generally in a healthy, profitable state. But when it drops below 0, that's when investors start selling at a loss, which can signal fear and capitulation. These levels tend to create natural floors and ceilings in price action, making them essential to watch. And finally, the real power comes when you combine SOPR with the MVRV. While the former shows us short-term profit-taking behavior, the latter gives us a bigger picture view of how overbought or oversold Bitcoin is based on historical investor profitability. Together, they provide a much stronger signal for spotting market tops, bottoms, and trend reversals. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.